In this video, we're going to show you how to combine trend lines with trading volume so that you can see where the big guys enter, which gives you a huge advantage. Everything we cover in this video works for crypto, stocks, and Forex, as price action and volume tools stay consistent across all asset classes. Please hit the like button, but more importantly, hit the notifications bell as it goes a long way in supporting our team. Let's first go through the trendline basics to get everyone up to speed. Starting with trend lines in a downtrend. In a downtrend, price makes lower lows and lower highs. This allows you to place a trend line along the top, connecting the swing high points. It acts as a resistance level, meaning short trade opportunities arise at the trend line. Make sure to look for candlestick patterns when price reaches the trend line to show a reaction to the trend line, or else price can break through and you'll be faked out. If price breaks above the trend line, it can signal a trend change from a downtrend to an uptrend. Also in a downtrend, you can place a trend line connecting the swing lows. This means you can take long trades against the trend when price reaches the trend line and forms a candlestick pattern. This is a more aggressive entry because you are trading counter trend and against the strong downtrend. So if you decide to trade a counter trend line trade, make sure those are quick entries in and out to not get trapped. This is the dollar-yen currency pair. You have a moving downtrend. You can place a trend line like this, connecting these two swing high points. Price then breaks the trend line with a higher high and with a bullish momentum candle, which confirms the trend change and that you now have a bullish bias and want to look for long trades through the lower intraday time frame. Now going in the opposite direction. Trend lines in an uptrend. In an uptrend, price makes higher highs and higher lows. This allows you to place a trend line along the bottom, connecting the swing low points. This trend line acts as a support level, meaning long trade opportunities arise at the trend line. If price breaks below the trend line, it can signal a trend change from an uptrend to a downtrend. Also in an uptrend, you can place a trend line connecting the swing highs. This means you can take short trades against the trend. Again, this is a more aggressive entry because you are trading counter trend and against the strong uptrend. So if you decide to trade a counter trend line trade, make sure those are quick entries in and out to not get trapped. This is the Tesla stock long trade we took. These reversal points give you a very key support and resistance zone. These two reversal points give you your trend line. This here is your area of confluence, where the trend line and SR zone crossed, which means when price reaches this area, high-quality long trade setups arise. High quality means there is a higher percentage chance that price will react to the area, but more importantly, will move a greater distance, which means more profit. Once price comes down to the area, the trade setup came in multiple parts. First, you had multiple long wick candles reacting to the zone and failing to push lower. Second, you had a candle react to the trend line. Third, you had a gap down, which means price is currently irrationally underpriced relative to its recent pricing. So there's a chance that price will reverse to fill the gap back to a fair market price. Once you had an intraday trend change confirmation, you would go to the lower intraday timeframes and take a long entry. Let's show this again. This is the block stock long trade we took. You have a moving uptrend, so you want to trade with the trend. These reversal points give you a very key SR zone. These three reversal points give you your very high quality trend line because the more reactions to the trend line, the better the trend line. There was also a recent long trade setup here through the inside bar and higher low and higher high. This here is your area of confluence where the trend line and SR zone crossed, which presented a high-quality long trade setup. Once price comes down to the area, the trade setup came in two parts. First, you had a very long wick candle, which shows a reaction to the zone and that buyers are stepping in heavy. Second, you had a gap down, which means price is currently irrationally underpriced relative to its recent pricing. So there's a chance that price will reverse to fill the gap back to a fair market price. Once you have an intraday trend change confirmation, you would take a lower timeframe long entry. Let's take this up a notch through combining the usage of multi-timeframes. This is the Bitcoin entry we took. and we're on the 12-hour time frame. As you know, Bitcoin has been ripping recently, but if you know price action, you would have seen this coming many weeks before. Price is in a moving uptrend, so you want to trade with the trend. These reversal points gave you your previous trend lines, and once they broke, showed the next move upwards. These reversal points here give you a key SR zone. These two reversal points give you your trend line. This here is your area of confluence because you have the backside of the broken trend line. You have your trend line crossing in the same area, and you have the key SR zone also lining up in the same area. Once price comes down to this key area of confluence, you had a long wick candle form, which shows a reaction to the area and presented a high quality long trade setup. You then need to look inside of this area on a lower intraday time frame to find any form of price action that signals a trend change from a downtrend to an uptrend, because this is still a current moving downtrend, and price can stall at the key area, form the long wick candle, and still break right through and continue on downwards. So let's pull up the 1 hour time frame and put it beside this one. On the left is the Bitcoin 12-hour time frame we just looked at, and on the right is the Bitcoin 1 hour time frame. Your trade setup here is this same area here on the 1 hour time frame. Using this lower time frame, you were able to place a trend line onto the pullback, and once it broke with the higher high, this confirms the pullback is over and that the next leg of the larger uptrend has begun. Some would take a breakout long entry. Some would wait for a pullback to this intraday key level. Regardless of which you use, you still need to go to the even lower intraday timeframes and combine the usage of volume and order flow for precision entry and exit points, which we cover with our members. Notice how this setup was clear even before the presidential election that sent this to all-time highs. Now that we've covered the basics, we need to pair trend lines with the usage of volume tools. Volume is part of the larger concept of order flow, which allows you to see where the big guys and large institutions are actually entering trades to avoid being faked out by false trade setups. The first volume tool we'll be using is the cumulative volume delta. So before we continue, we want to hear from you. What other topics do you want us to cover next? Let us know in the comments below right now, specifically what video topics you want us to cover next. Also, please hit the like button as it goes a long way in supporting our team. To access this tool, go to Indicators, type in Cumulative Volume Delta, and select it. It'll appear below your charts. The Cumulative Volume Delta Indicator, or CVD indicator, analyzes volume and price action on the lower timeframe bars to calculate volume delta. This means it compares buying and selling volume and pressure at specific price points. Now, we use the CVD specifically to find divergences, as this is the most effective way to use this volume tool. This is the Coinbase stock 4-hour timeframe trade we took. You had a moving downtrend before you had a higher low form, followed by a higher high, showing a trend change from a downtrend to an uptrend. So you want to trade with the new moving uptrend. These 3 reversal points give you your current trend line. This here is your area of confluence because you have the backside of the broken trend line, and you have your new trend line crossing in the same area. Once price comes down, you had an inverted long wick candle that is also a candle color change, and also another long wick candle, all which shows a reaction to the very key area of confluence and presented a high quality long trade setup. Here's where you take it to the next level. When you look at your CVD indicator, you also have a divergence that occurs. Price makes a higher low, while the CVD makes a lower low, which is divergence. This means this is a super high quality trade setup through the integration of volume. Once you had an intraday trend change confirmation, you would take a lower time frame long entry. This setup was very high quality, and it was clear through the gap up afterwards and eventual drastic move upwards. If you want the exact free charting platform we are using, click the link below this video. Moving on to the next volume tool, volume profiles. This is the Solana crypto trade we took, and we are on the 12-hour time frame. This setup was a lot like the Bitcoin setup because most crypto assets are positively correlated with Bitcoin, so the moves are often very similar. You have a moving uptrend, so you want to trade with the trend. These reversal points give you your very key SR zone. These reversal points give you your key trend line. This here is your area of confluence, where the key zone and trend line both lined up, which presented a long trade opportunity through the multiple long wick candles that formed at the area. You then need to look inside of this area on a lower intraday time frame to find any form of price action that signals a trend change from a downtrend to an uptrend. Because this is still a current moving downtrend, and price can stall at the key area, form the long wick candles, and still break right through and continue on downwards. So let's pull up the 1 hour time frame and put it beside this one. On the left is the Solana 12-hour time frame we just looked at, and on the right is the Solana 1 hour time frame. Your trade setup here is this same area here on the 1 hour time frame. Using this lower time frame, you were able to place a trend line onto the pullback, and once it broke with the higher high, this confirms the pullback is over and that the next leg of the larger uptrend has begun. You now look for long entry points exclusively as your bullish directional bias is confirmed. So, price action is highly effective, but for more advanced precision entries, you want to integrate volume to see where the big guys and large institutions are entering so that you have large momentum on your side, which means price will move a greater distance and result in more profit. This is where the volume profile tool comes into play. Volume profiles tell you how much volume occurred at a specific price level. This is key because traditional volume tools tell you how much volume was traded throughout an entire day, which isn't as useful. So let's put the 1 hour time frame on full screen. To access the volume profile tool, go to your indicators and type in session volume profile, and it'll appear on top of your charts. Each volume profile section represents one trading session, and it resets once the next trading session begins. These bars represent the trading volume that occurred at each price level. The larger the bar, the higher the trading volume was. The line in white is called the point of control, which is where the most trading volume occurred for that trading session. The most trading volume means the big guys and large institutions placed the most buy and sell orders at that area. This here is where your pullback entry point occurred. So what you do is you look at the previous trading session's point of control as it is fully formed. You use the previous point of control because the big guys took big action at that area. And if price comes back to that previous point of control, they might take big action again, which presents long trade setups. Notice how your pullback to the previous point of control formed candles with the wicks sticking out, showing a reaction and a long trade setup. To take this even further, this point of control also lines up with an intraday key SR level, making this a very high quality area of confluence. As a result, this ended up being a massive move upwards, and we banked heavy on this trade. Regardless, this is only part of the equation. You still need to go to the even lower intraday timeframes and use our key entry and exit strategy for precision trades. If you want the exact free charting platform we are using, click the link below this video. Let's show this again. This is the euro-dollar currency pair short trade we took. We are on the 4 hour time frame. You have a large moving downtrend. A pullback then started to occur, but clearly it was short-lived because once you placed a trend line below the pullback, price broke right through it with a huge bearish momentum candle, which confirms that this is indeed a pullback and not a true trend change, and signals that the larger downtrend will continue. So you want to trade with the trend. These reversal points give you a key SR zone. Price then pulls back to the zone and forms a long wick candle, followed by an inverted long wick candle that is also a candle color change, all which shows a reaction to the zone. As always, we need to look inside of this area on a lower intraday time frame to find price action that signals a trend change from an uptrend to a downtrend. So let's pull up the 15-minute time frame. This area here is where the trade setup was from the 4 hour time frame. On this lower time frame, you can place a trend line below the pullback, and once it breaks, it confirms the pullback is over and that the larger downtrend will continue. Let's now turn on the session volume profile tool to find our short entry point. You again use the previous trading session's point of control right here, which creates a resistance level for your current trading session. Price pulls back to the previous trading session's point of control and reacts to it twice. You could enter short on this lower low here that occurred after as a confirmation. Or you can again place another trend line like this, and once it broke below, take a short entry. Now, what we've covered in this video is only scratching the surface. If you want to learn more advanced price action, but more importantly, with order flow and volume to trade crypto, forex, and stocks with precision accuracy, click the link below this video or go to wisetrade.com. As always, please hit the like button as it goes a long way in supporting our team. So thanks for watching, and I'll see you in the next episode.